This video is about basic principle and concepts of price action methods, which is candlestick. Candlesticks are basis of each stock chart and they convey useful information about change of price in a certain amount of time. And this data is so practical, especially if you want to evaluate and predict future price of stocks. Reading candlestick charts requires some strategies that I will teach you in the simplest ways. And also, if you want to make profit and take advantage of these strategies, you need to practice and rehearse these strategies daily and hourly. And in this case, you can be so professional. Candlesticks, the red one and green one. And in red one, we're saying that the sellers are so stronger than buyers, and in green candlestick we are saying that buyers are stronger than sellers. And also in today's video I'm going to talk about red candlestick. And as you see, it has a several parts, and this one is upper shadow, and this point is opening price point, and also this is the body of our candle, and also this is the closing price point of candle, and this is the lower shadow. The upper shadow means that the buyer wants to buy the share with higher price, but they couldn't do this, and eventually the price decrease and it comes to this point. And also the lower shadow tells us that the sellers wants to decrease the price and sell, but finally they couldn't they couldn't be a success in their mission, and the closing price was here. And next I'm gonna show you the real-time example from red candlestick, and it is from Bitcoin for today's price of Bitcoin. For example, we can see in this candle the opening price is about $98,000, and also in this candle sellers were so stronger than buyers, and as we can see, from $98,000 it decreases to approximately $93,000. And as you can see, there are upper shadow and lower shadow, and the upper shadow means that buyers want to increase the price to approximately $99,000, but they weren't successful in their missions. And also the green candlestick, and also as you can see, the green candlestick is so similar to the red candlestick, and also there are some essential difference. And as you can see, this is the upper shadow, this is the lower shadow. In the green candlestick, the opening price is from here, the lower point. But as you can remember, in the red candlestick, the opening price was here. But in green candlestick, it is different. And also the closing price of green candlestick is this point. And also this is the body of our candle. And the upper shadow in green candlestick means that the power of buyer on the time was higher than the seller, but eventually seller were successful and sell, and also the price decreased to this point, but finally the buyer were stronger, and also the closing price was here. And as we can see, the opening price and the closing price was is in the higher level, and it means that on that time, or for example, it can be the hourly candle or daily or weekly, whatever. It means that the price has increased. And also, I brought you a real time example and instance for you to grasp the information appropriately. For example, in this candle, we can see that the opening price is about $97,000, and also this is the chart of Bitcoin. And also we can see that the closing price of this green candle is about, in last sessions, I talked about the red candlestick and green candlestick, and as you can see, in red candlestick, this is upper shadow, and it means that buyers want to increase the price to this level of price, but eventually sellers were stronger and they decreased the price. And also, this is the opening price of red candlestick, and this is the closing price of red candlestick. And you can see that the closing price is too much lower than opening price, and it means that sellers were so stronger than buyers. And also, this is the lower shadow, and it means that seller wants to decrease the price to this level, but finally they couldn't be successful in their mission. And also, this is red green candlestick, and this is too much similar to the red candlestick, but with some substantial difference. Like, for example, in green candlestick, the opening price is here and the closing price is in this point. And as you can see, the closing price is higher than the opening price, and it means that buyers were stronger than sellers, and they increased the price of the market. And also, this is the upper shadow, and this is the lower shadow. For example, in this lower shadow, this means that sellers want to decrease the price to this level, but they couldn't be successful, and finally buyers increase the price. This is a real-time example of gold market, and as you can see, there are tons of red candlesticks and green candlesticks. For example, in this red candlestick, the opening price is about $2,715, and also the closing price is about $2,680. And as you can see, the closing price is lower than the opening price, and it means that sellers were stronger than buyers, and they were successful in decreasing the price. Well, there are several types of candles, and one of the most essential candles are shooting stars. And shooting stars are kind of alarm about change in the trend. For example, when you see a market that has an uptrend, and you suddenly saw a shooting star, and it doesn't matter the shooting star is red or green. In both types, it is so strong, and it is like an alarm. It is like a warning that you should be aware that the trend of market can change. And also, for example, in this example, before the shooting star, the market was uptrend, and after seeing the shooting star, the market changed its trend and altered to the downtrend. Or, for example, in this example, we can see that the market has uptrend, and also suddenly it sees the red shooting star, and then it has changed its trend to the downtrend. One of other candlesticks are long body candles or high momentum candles. These are candles with a long body, and also small shadows. Upper shadows and lower shadows are so smaller than the body of the candle. And also, these are a strong signal that the market going to keep its trend. For example, in uptrend, when you see long body candles, it means that it's going to be uptrend. Or in the falling trend, when you see several red candles, it means that the market gonna keep its trend to downtrend. And the other type of candles are bullish reversal candles, and it means that the downtrend are going to change to the uptrend, and there is some condition about bullish reversal candles. And for example, the lower point of the green candle should be lower than the lower point of red candle. Also, the closing point of the green candle should be higher than the closing point of red candle. By knowing these two conditions, you can use this type of candles, and it is a good hint that the downtrend is going to change to the uptrend. And this is one other type of bullish reversal candles. And also, there's two factors for using candlestick patterns, and we should know them perfectly. The number one is defining the trend of market, and we should know that the market is falling or rising, or it is uptrend or downtrend, or for example, it is consolidated area or whatever. And also, we should search for pattern, and also we should practice to learn this pattern a lot. And this is like, for example, learning mathematics, and we should rehearse and practice a lot, that our eyes get accustomed to these patterns and define them by just scanning the chart. And also we should get approval, and getting approvals or several types. For example, there is the volume approval that is so important, and I'm going to talk about it in later sessions. And also there are four types of trends in market. It can be the rally based drop. It means that, for example, the market is at first uptrend, and then there is a range or side or a consolidated area, and then it's gonna fall and the market is downtrend. And for example, at first the market is uptrend, and then there is some consolidated area, and then the market fall. It is a downturn. Or number two is about drop based rally. It means that the market is at first downtrend. For example, it is like a market downtrend, and then the market sees the consolidated or range area, and then the market gonna change its trend to uptrend. And also rally based rally, and also another one is drop based drop. And this is a real-time instance from gold market, and I brought you some example about, and this is about drop-based rally. And as you can see, this is downtrend, this is a consolidated area, and also this is a uptrend. Or it is about, at first it is uptrend and a consolidated area, and then it changes to the downtrend. Thanks for watching.